Hey guys, so welcome to the free training video, and in the next few minutes I'm going to be showing you more about price action that you've ever known was possible. Now before we get started, this is actually not your basic support and resistance, candlesticks, uptrend and downtrend, all those basic stuff. I believe you should know that by now. If you don't know that, you can check my free YouTube channel. I have some content on that. Or you can check YouTube, you can find some content on there. Like those will give you an idea of how to read the market, but those will make you profitable. Like knowing them doesn't mean you're special or anything. Anybody can read the markets. Like the guy in the book Trading the Zone says, you can either click a buy and so anybody can click on the buy and to go into profit. So those aren't like special skills or anything. Okay. So let's get started. So first things first, I'll show you top-down analysis. It's actually the best way to analyze your chart and make money off it. So it's not every time you have to go this far, but I'm going to the 1 week first. Sometimes it might actually have to go to the 1 month, but this is the 1 week. Now, this is a 1 week time frame, okay? What can you see here? You can look at market structure around your current trades. So if you just in case you don't know what market structure is the formation of market structure to form a trend. So you can see a higher high here, a higher low, a higher high, a higher low, a higher high. So what does this structure tell you? That it's on the market is on an uptrend. So you can see that, and so you will need to take more buys on this trade. Taking sales is actually very risky. So you want to take more buys on this kind of trend or on this kind of market structure. Now there's a situation where market structure is broken and the rest of them, and you can expect a reversal of trend, but I'll go through that later in the video. Now, what can you see here? A big association candle, and you can see a lower low, a lower low, a lower high, a lower low, lower high, lower low, and then you're seeing something like a consolidation. Now, this is where price is as at 2nd of January 2021. And price is looking to break below this point. Do you get what I'm saying? And once price breaks below this point, you're expecting the next stopping point to be here. So it's going to be around 1.65894. Now, bear in mind, this is the weekly time frame. So you're just basically, what you're doing is you're setting your targets for where you want to take your profits or where you want to take your final profits in the market. Okay? So you can set it either here. The price is definitely going to get here. And best case scenario, it gets here. That was worst case scenario. So we take it with this. This is our final take profits once price breaks below this point. So let's draw something little here. Okay. So this is what we're looking at. One price breaks and close below here, then retest and you get. Now, how many pips is this? Let's calculate how many pips this is. So okay, down to you can see that 571 pips. That is where your final take profit is. Okay. Now that you know that your final take profit is 571 pips, you're going to go down to the 1 day time frame. So what can you see on the 1 day time frame? It's actually starting to break below. You can see a double top here, 1, 2, and it's going to break below and come and retest. And then it's giving you something like a heads and shoulders, and that's going to take you down to this price point. Now that you know this, what you're looking for now is an entry, because that's why you went to the higher time frame, to get a bigger entry point, to get a bigger target profits. And now what you're looking for is an entry that gives you minimal risks with the best opportunity for you to maximize on it and take a trade. So imagine if you set a stop loss of 30 to 50 pips, okay? And then you take this trade, and this trade go and you get 571 pips, which are target profits. Now, if you're using 0.1, that's like $571. I know the best thing about this is that this will happen in a week or at most 2 weeks, given how fast Euro NSD moves. This will happen in a week or 2 weeks, except market is consolidating or something. You can still hold on to that if you want to. But once they start moving, it's going to happen in a week or less than 2 weeks. So once you have this now, you're in 1 day, so you can see closer price action. What can you see here? You can see this candle. By the way, if you don't know what exhaustion candles are, because those are related to market structure, I feel like most of you haven't heard of that. Exhaustion candles are candles like if it's on an uptrend, okay, you can see it's going up here, and then you can start seeing exhaustion candles. So let's close to the so my blue candles here are my sell candles, and my black candles are my buy candles. I feel like you should have noticed that by now. Now look at this. Exhaustion candles are candles where if you are when you're on an uptrend, you start seeing wicks. So let's close to the top because buy candles close to the top to show that there's buy pressure. There are more buyers in the market and you're expecting the trend to continue. And you can start seeing stuff like that. So you can see an illustration here and here again, and you can see it is in close to the top. And then this candle signified everything you need to know and start going downhill from there. So you get that's what an illustration candle is. So vice versa, you can get something like that when it comes to buying. Now these don't qualify as illustration candles because of after this candle formation, the next candle formed with a bearish pin bar. And look, everything is just tiny, tiny, tiny candles. So this was just basically going up for a lower high before it's comes back and gets down to this point. Now this is where my entire bias is. At most, I won't be taking anything. I won't be taking any trade in the market in between these zones. Okay, you see these points year to year. I won't be taking anything in the markets. Why? If it breaks above here, retest, then it's going to go somewhere around here. You're looking at something around 1.7892, and if it breaks below here, you're looking at something around 1.63870 as your final take profits. I said, bear in mind, I said final take profits because to make money in the market, you have to be constantly taking profits at different points in time. Market doesn't move in one direction. It can even go here, get to this point here, revert here, come and take you out at break even, and continue moving. You get that? So that's why you have to always be taking profits at any point in the market. That's how you leverage on the opportunities the market gives you to make money from it. Now, this is the 1 hour. You can see the close. So this close is close to the bottom of the 1.70085 this thing support line. Now what we're looking for is a break below this line and a retest. Now this break and retest might not come. You most likely won't see it on the daily time frame. So you go down to the 4 hour and the 1 hour to take these entries. What can you see here? You can see a little bit of execution candles here. So maybe it might go a little bit to this point. Points. There is another minor resistance here. This is for the 4 hour and for the 1 hour. So you can get to this point and continue and then break below this. Now, another thing you have to take into consideration when you're looking at this. Okay, wait first. Let me just get to your entry first. So let's go to the 1 hour. You're looking for something. Like I said, you can see this close at a bearish engulfing. So definitely it's going to get to either this point or this point, then start retracing back, and then it can start going down. Now this is all you are looking for in between. You can trade in between these points, but I'll get to that later in the video. That's ranging, and you can make profits from that. So what you're looking for now is for it to go to this point or even from here and break below and continue going downwards to your target profits. So now that you know where you're going to get your entry, let's say you set a stop, a sell stop here, so you don't chicken into the trade and sell when it's not going down. Set a sell stop here, and then your stop loss should be above this point, because if it comes above this point again, the trade is not going to go in your direction. So let's say you set a sell stop around here. Okay. And okay, your stop loss is around 80 pips. It's actually going to be less than that if you go on a lower time frame. So we're talking about 80 pips, 70 pips. Okay, it's cool. So 80, 70 pips. It's actually very big, so you don't want to be taking you don't want to be taking any big lot size with this. Now, I will excuse you taking a 77 pips stop loss, which is actually very big. I won't take something as big as that if you're going to use a very small lot size. So the main thing is you want to get in the trade, right? Because when you get in the trade, you're going to be getting other entries in the market. So you're going to see market structure form the lower lows and the lower highs, and you're going to take other trades, other entries again, which you compile to give you the most money out of it. So let's say your stop loss should be around here, 70, 80. You take your first entry around here. Now this will be the entry that we might take something like a 0.1, and you can be moving a 0.2 routinely, and leave like a 0.5 to the end of it. Or you can take something like a 0.50, that's half a lot size, till I'm moving 0.10 till the end of it. Once you've gotten this, all right, once you've gotten your stop loss 80 or something piece, you let the trade run, and over time it might get here, form a lower high and continue going down, lower high, you sell again, goes down, lower high, you sell again. I'll show you a better example using the previous charts. But now you understand that you've gotten your entries. And one thing I want you to understand about this, entries have a time for taking them. So this is the euro NSD. So the main time you should be looking for this to enter to take an entry into this trade is around the London session. The London session in Nigeria comes around 8 a.m. or 7 a.m. to 8 to like 9 a.m. So that's where the movement starts for this. Now, on some few occasions when NSD is reacting, it moves in the midnight. So you can take those trades in the midnight. But typically, if you want to be on the safe side, like I tell my students, take your trades for the any pairs that is with euro, you should take it at the London session. GBP pairs to take it at the London session or the New York session. These are when the traders in these time zones are actually active at trading. So you know that okay, if it's good, if you see a candle like this, all right, you can see that this came out at 8 o'clock in the night on the other first. If you see a candle like this now breaking below this, there's a very slim chance that this is a fake out when it's around 8 a.m. when it's around the London session. But if you're saying it in the midnight or at an irregular hour at 8 p.m., 9 p.m., 10 p.m., that 10 p.m. is around market close or so for a day, there's a higher possibility that this is a fake out. So if you're getting me, you've gotten your entry around here. So basically, because this is a steel chart, that's why you're having a stop loss of around 80 pips. It's actually going to be less. At most, it should be 50. It should be 50 pips, and at least it should be like 20 pips. And why I say 20 pips because this particular pair is Euro NSD pair, so it actually needs you to give it space for stop loss because it's fast moving. Now you've gotten your this thing. Bear in mind that this is actually the zone I said I wasn't going to. If I'm looking for long-term trades, that is, I'm not going to be trading if it's not breaking above here or I'm not going to be taking any trades. Now you don't. The market is full of opportunities, so imagine not taking any trades within this time frames. Okay. So imagine not taking any trades within 299 pips. Let's say it's ranging below 299 pips and you're taking any trades. That means you're letting the opportunity go past you. You get that? So that's what you are going to, so that's one thing I want to show you now. So basically, prior to what I was talking about, this is actually from a higher time frame. Let's get it out. Okay, so it doesn't confuse you. So let's use this for the lower time frame. This is like a double top or stuff like that. So you can see that, let's say you took a trade here. After this was when, okay, 4 o'clock. No. Let's look for a better example. Let's see if I can get a better example. Okay. All right. Okay. So let's go. Let's just use this for an example. This is 6 o'clock in the evening. That's cool. You can take it by that time, but anything from like 7 to this thing, you want to avoid it. You might avoid this one. It's still cool. Because if it comes down to the next morning again, look, nothing really happened till the next morning, to the next day around the New York session. That's when the market started moving down. But let's just say you took it around this point, okay? But remember, you want to take it around the time zones where the particular pair you are trading is going. Now look at this. So you have a doji here, then you have this small bullish candle, bearish candle that close to the bottom. So you take it from here. What I mean by re-entries is this: you take a trade from here, okay, and so you take a trade from here. Sorry about that. And it comes down to this point. That is here. 110 pips, okay? So you took a half a lot size there, so 0.50, and you remove 0.10 here. Now it comes up to form a lower low, so it retraces about 60 pips to form a lower high. Now, this point again, you sell. Okay, remember you've put your stop loss at break even or like 10 pips in profit, so as even if the market comes back against you, you're not losing anything on this trade. This is how you use your risk management to leverage on the market and actually make the most money out of it. Okay, so it comes down around here, and let's say you wait for the morning candle around here, you sell. Okay, it goes below these points because if you look, there's a minor resistance here. I don't really have time to show you that, but if your eyes are detailed, you can see it. So you take another sell from here, and then it gets down to this point here, and that's like 148 pips. Are you seeing? So initially your first trade, so your second entry is at 148 pips, okay? And your first entry from this point here is at around 258 pips. You see the amount of money you're making in the market. Like even if you're using a 0.01, like combining the two together, 258 pips plus 148 pips, that's about almost $500, and that's about 200 and something thousand now in the market if you convert it to Nigerian currency. So once you get that, I want you to understand the purpose of re-entries. Once you know how to use re-entries, you're not going to be rushing in the market. Now there are some rules that govern re-entries. So your stop loss should already be at break even or in profits from your first entry before you take a re-entry. So the trade you took from here, your stop loss should already be in profits before taking a re-entry. That's number one. You want to secure this thing because you don't want to be losing on both ends. This is how you use your risk management. Number two, your stop loss should be small, so it should be something that if it gets hit, it won't cancel out all the profits from your previous trade. You get, or at worst case scenario, it just leaves you at break even. So how do you do that? If you want to use a bigger stop loss, you reduce your you reduce your lot size. So if you're using 0.50 here, that's a half a lot size. You can use 0.20 around this point for your re-entry. You get, you can use 0.20 around this point for your re-entry. Once you use that, even if it gets above here, because if you are taking it here, your stop loss should be above here. Then even if you lose that trade, it's not going to cancel out the profits you've made from your previous trade. And 0.20 you can be moving 0.05, 0.05, 0.05 until it gets to your particular target profit. And remember, our target profit is not even showing in this 1 hour chart. So let's go to the 4 hour. Okay. You can see that this still has a long way to go. So this is how you use market structure to leverage on what the market is giving you. Do you get what I'm showing you? I believe you understand what I'm showing you now. If you have any questions, you can leave them in the comment section. Look at this is just absolutely beautiful because you're not stressing yourself and you take very few trades. You can take only this trade in a week or in 2 weeks and make a minimum of 500 dollars to $1,000 to $2,000, and you do this without stressing yourself. Or even if you're building a small account, let's say you're starting from, because I feel like if you're a newbie trader, you're starting from a small account, so you're starting from like $100 or $50 or anything, you still get to make about $200 from this trade, which is about 90K if you convert it. Now, another thing I want to tell you is if you're not using Bitcoin to withdraw, I don't know what you're doing, you're losing money with this Nigerian exchange rate, because if you're using Bitcoin, you're getting an exchange rate of like 4.75 to 1 naira. So if you're withdrawing $1,000, you're getting 475,000 into your account. As the last time I withdrew, that was in December. So another thing is, if you're I'll talk about brokers. So if you're using hot forex, I advise you to get rid of them. Those are due dex brokers. So they have certain limits that doesn't allow you to scale and build your accounts. So brokers that I recommend are Cut4x and Hugosway. So I'll leave the spellings in the description of this video so you can check them out. So from this video, I have taught you how to use a top-down analysis. So you look at your market structure first. Just to reiterate, you look at your market structure first, just so you're not confused on how we got to the conclusion of this trade. And it's very simple. This is stuff you can do in 5 to 10 to 20 minutes of your day, and just set your your pending order and go about your day. If you're working, let's say you're working, and go about your day. Detach yourself from the trade and detach yourself from the outcome. Okay, so it's not every time you see something like this that it will get into that you win the trade. But if you're taking 10 trades, and out of 10 trades, let's say you're taking 10 trades that your target profit is around your risk to reward. Imagine now, if you're risking, let's say, what was the risk here? It was around 80 pips. 80 pips to get almost 500 pips. That's more than a 1:5 to 1:6 reward ratio. So let's say you're taking 7 trades. Let's say you take 10 trades. You're not going to take 10 trades in a month, but let's just say you take 10 trades in a month. Okay? Let's say you take 10 trades in a month. After that 10 trades, you lose 4. That is, these guys did not go into profit. They did not stop you at break even or anything. You actually lost them. Let's say maybe you cut your losses short or they hit your stop loss. If you compound the profits from the ones that actually went in your way, you are still making a whole lot of money. Now, bear in mind that you also have your break evens and you also be cutting your losses short. So your main aim is not to take a big loss in the market. Okay, so to reiterate, how we got to this conclusion. So we went back to market structure on the 1 week time frame. This is a 1 week time frame. After seeing the illustration candles coming from around March, I remember this period very well. This was very maybe like one of the biggest amounts of money in the market. This was when coronavirus and everyone was shutting down. So it was like every day, if you're making less than 200 pips, that means you're missing opportunities. Euro NSD was crazy. Euro odd was crazy. GBP was, everything was just moving. Euro USD, 8 a.m. sharp, it started moving and stuff like that. It was one of the easiest points in the market because you don't really have to stress yourself with so much detailed analysis because everything was fundamental at that point in time. Everyone was panicking. So gold was going up and the rest was going down. So look at this. So you can see the illustration candles because of the long break. So it goes again, a long week. And you can see that none of these weeks go close above this point here and see where the body of this cell can be close. So it went down, lower this thing, lower low, came around the lower high, lower low, and this bullish candle for just a week, and it continued going down again for a lower high, and a lower low. So from this, you can tell that this is on a downtrend. Okay, and if you go to the 1 day, like just to give you the bias and the confluences I actually brought to my sell bias. If you go to the 1 day, you can see something like an M here, right? You can see it like a double top. And once it breaks below here, it's going to retest here and start going down. So that's on that bias aside market structure. That is its price action. What price is telling you? That's on that bias you can take with the M on the lower time frame. Even when you go down to the 4 hours, all you could see was more of sellers in the market. So who are you to go and start buying when everyone is selling in the market? Because you're a retail trader. I'm not going to go and start telling you, hey, start holding this trade for 2 years or anything. You want to take your profits now. So these things I'm showing you, at most, when you're swing trading, you are going to be taking, ouch. So at most, when you're swing trading, you're going to be taking profits in like a week or 2 weeks. At most, it's going to get to a month, but that's on rare occasions. On rare occasions, too, it gets to 3 weeks. So it's mainly within that week that all these things, all these movements happen. Like what time frame is this? Okay, 1 day. Let's see. Let's measure this. Okay, so let's say you took something. Okay, you can see this was at most a month, and this is 817 pips for a month. Now, I don't want you to just get lost on the source like this because you want to make the most money as a retail trader and leverage on it. You're not just going to be taking on these swing trades. So when I took you to the lower time frame, you can see that there were other entries at this point where you can just put your, let's say, remember I said hypothetically on this analysis, we are using a 0.50 to get into these trades. So if you have used a 0.20 in between all of these to actually get into the trades, okay? That was, let's say, at this point in time. If you go back here, to actually get into this, let's say when it broke below this point here, because you can see the support levels easily. If you can't see them, you can switch your charts to line charts. So you can see it broke below, came back and retested and gave us this candle around 11 a.m. So definitely you'll be looking to enter it. So let's say you're taking something with a 0.20 around there. I don't want to hold it to your final take profit, okay? You want to just take your profits like at 100 pips. So you took it from here down to this point here. This is 189 pips, and you held the whole 20, the whole 0.20 lot size to this point. That's mad money because I don't want to calculate it now, but I'm 100% sure that's above 400. That's you're looking at like a minimum of $400 on that trade. So imagine that, and it's going to take you very few hours because most of this is just because at the end, towards the end of last year, 2020, the market UNS was actually performing slow. If I had used something like a GBP USD or Euro JPY for analyzing this video, you would have seen faster movements. But I'm just giving you guys a heads up that Euro NSD, Euro odd is most likely to move faster within this thing because they have their I've forgotten what they call it. It's something it has to do with their GDP and stuff like that. So attention is usually around the NSD or pairs with NSD around this point. So you've seen the top-down analysis, you've seen how you can take your entries or these trades, okay? So basically, you don't have to be stuck with one position. It's not do or die. My guy, it's not do or die. So if you take that trade, even on this smaller time frame, let's say if you are taking that trade and you've taken another one around here again, like see when this one came around, this was around 15 this thing that was 3 p.m. and you've taken it and you're taking your entries. So your main trade, you've taken 0.50, and let's say you've reduced this. Remember, you're taking continuous this out of it. So if you reduce it to like 0.20, I want to hold that 0.20 all the way down to 1.63870, and that's above 500 pips. Then the re-entries you're taking them at maybe when they get to 200 pips. If it goes down again, gives you a lower high around and fits on your confirmation, you sell again. It goes down, give you 100 or 200 pips. You collect your profits and goes again, and that's how you plan it and make the most out of that trade till you get to the ending of that trade. Okay, that's how you make the most money out of your trades. So I've spoken about how you can make the most money out of your trades. I talked about association candles. I believe most of you didn't know about that. And market structure, how you can use market structure. So market structure goes beyond what do you call it? Market structure goes beyond your up and down trend. It also has to do with the candles. I have explained what illustration candles is. I don't want to go deep into candles here. I believe you should know a fair bit of this thing. And if you want to know more about candles, I have an entire video dedicated to that for my students actually, so you can get to that, because I've given you a lot of free game here that will help you in 2021 to make the most money. So execution candles, your market structure, you're taking out your entries and everything. Now all you have to focus on is for all the only thing you have to focus on now is your broker, because as much as hot forex is good, like if you're a newbie trader, I'm definitely sure you're looking to use a regulated broker, but the regulated brokers won't make you that cash that unregulated brokers will make you. So check on something like my recommendation, either you're using an Exness Pro account, a Hugosway account, or a Code Forex account. And you want to be withdrawing in Bitcoin to maximize your profits. So okay, let's imagine you make $1,000 and you want to withdraw $1,000. So let's say you're using a regulated broker and you're withdrawing directly to your Naira account, okay? So you take your Naira account and you withdraw it. What you'll be getting at bank rates, the last time I went to get dollars from the bank, it was 388. So imagine getting $1,000 and you're getting that 288,000 into your account. Yeah, it sounds like big money, but it's not big money. Then but instead they send that to you as Bitcoin, and you can either sell to Luno, which I don't recommend it, but you can sell to your local Bitcoin vendor. Just make sure you don't get scammed. And you sell that at 470. Let's say you sell that at 460. You're getting 460K, 470K. That's almost 100,000 more than you'd have gotten if you are doing this. So you see, everything about this is leverage. So leverage on the opportunities that this is giving you as Nigerians and everything to make the most money out of the market. Now, if you found value in this, then leave a like button, leave a comment if you have any questions. I'll actually answer them, so long as they don't go way too deep into what I offer in the premium class. But I will try and answer as much questions as possible. Then another thing you need to focus on. So this is, at the time I made this video, this is Saturday actually, which is why market's not moving. But as time goes on, I'll make more videos with markets moving. You can follow me on Twitter at Lazy Trader, LAZYTRADER, Lazy Trader, and you can follow me on the same at handle for Facebook. Now, what I'm doing is this year I'm hosting a PAB, a Profits Accelerated Bootcamps for traders. So if you're a newbie trader, you can actually get into this. But if you're a trader who has been trying to be consistently profitable and you haven't been able to make it, then this is actually for you. I'll leave the link in the description so you can read all about it. But basically, if you had to feed your family entirely from the profit you're making from trading, would you still trade using the same methods you're using now? Because if you're using it and it's not working for you, then you know that you need to change some things. Now, I didn't even go down into breaking the risk management into bits and numbers, but I'm sure from everything you can get an overview of how easy and profitable trading can be when you take things simple. You see that these are clean charts. I didn't even use a trend line, but you can use a trend line too. And you just have to see are just these lines. You don't have to come and start putting your MACD, combining it to RSI, and any of those things, or you don't have to come and start doing what do they call that? I've forgotten, but IML, yeah, I've had people complaining about it. IML and Trader, all these people are complaining about it in my DM. Please, people should leave me alone. I don't do any of those things, and it's not my business. So those are network marketing. Look, there's the thing. From what I've shown you now, okay, let's say you had a $200 account. If you are taking a 0.5 here and left it to this point here, you would have added almost like a minimum of $50 to that account, or $100 to that account. Bear in mind you took another re-entry. So in just this one trade, you can turn that $200 account, okay, to a $350 account, or a this thing, or you can even double it. Like, it's that easy when you actually have the patience and wait for price action to give you everything you want. So back to the profits accelerated bootcamp. This is like going to fully kick off from January. So I've already had 2 subscribers. I've already had 2 people register for it. Immediately I release it on the 31st of January. So what I want you to know is this, okay? This program is going to last for 2 months, 60 days intensive trading. I'm going to be explaining the reasons I take all my trades in a video to people in this secluded group. So you get to take this trade with me. So profitability, you get to be profitable with me. That's one for February and March. Because after March, I'm going to end this program because I have to focus on other goals I have for the year aside trading. So this is just like one of my first. This is just like one of my first goals I'm trying to like take out of the box. So you get to take every trade with me. I get to show you the 10 most profitable pairs you can take and leverage on them. You get access to the lifetime mentorship. So the price of the lifetime mentorship is actually 100,000, but if you get at the profits accelerated bootcamp, you actually get it at a cost-effective rate. So it's actually a little bit lower, actually lower than the current price, and you get that 60 days intensive training with me, and still get access to the lifetime mentorship after. So basically, after you're done with this, after we're done with the profit bootcamp, it's not like I'm going to leave you and you're not going to, like, I'm certain that you follow everything I teach you within these 60 days, because I did this because I want to be closely monitoring my. I've had people buy my lifetime mentorship, and it's crickets. Like beginning of 2020, there was an influx of students, and like more than half of them, they didn't contact me after. I don't know if they forgot it was a lifetime mentorship. So it's not like a course where you just watch and you get to watch, you get to ask me questions, and in between you can also get on other Zoom calls with me at any time, so that we can do a meetup and actually find out what your problem is. If you're having a problem, because trading can be difficult if you're surrounded by other traders and have a mentor to guide you, it gets easier and it takes the pressure off you, which is one thing you always want to be doing in trading. You want to be taking the pressure off you. So the benefits of the Profit Accelerated Bootcamp, you get it. So we're going to be having weekly Q&A when this thing. So to keep you accountable, I want us to be having every weekend, if I get a question and answer this thing, you can ask me questions on anything. And we can go over pairs, overview of what we're looking at and expecting from pairs for that week. You take my trades with me. I teach you how to build a small account. So this is actually for premium students, and I must have seen a certain level of progress, because I can't start dropping stuff like that now to newbie traders, or who I don't know who is actually watching this video or what time of the year watching this video. I'm watching it in 2025 or stuff like that. And you start using it now and you blow your account. So I want it to be something that I can monitor you as you learn to build your account. So you can build a $50 account to a $500 account in a week and stuff like that. I'll show you how to do it. There are 2 ways to actually do this, and I'll be showing it to you in the Profit Accelerated Bootcamp. Advanced psychology, I'll show you how to take most of the pressure out of it and how to actually be in the market. Like I showed you a 50 to 80 pips stop loss, and if you might have started, but just because it's a 50 to 80 pips stop loss doesn't mean you should miss out on that trade. Okay, remember it's a sell stop, so you're most likely going to be using that, and it can actually be smaller than that. Actually, if you use a sell stop from here, if it gets below here, now that I'm down on the lower time frame, if it gets below 1.70085, okay, let's say it gets below here, your stop loss should be around here, which is around 60 pips. So you shouldn't be going above these little struggle they had here on the consolidation distance. So you're looking at 50 to 60 pips stop loss, and this is why you use a smaller distance. This is why you use a smaller lot size here. Okay, once you get that, it's easier for you to take better entries in a trade. Like, well, it's very, like I always say, it's easier to take better entries in a trade when you have the right position from the onset. So if you had sold here now, okay, and it came here, some people might be buying here, but they're just going to lose. But you want to see this, you're like, okay, it's going down. Meanwhile, someone who doesn't really have a good analysis will be looking at it and, oh, bullish pin bar. then it comes again and it's also closed there. So it most likely will go up again. The person is buying around this point here and the trade just comes back against them at this time. So I also teach you risk management, how to make the most money. So even if you get on a 2 to 3 losing streak or this thing, you bounce back from it easily and still be able to make the most money out of it. So trading is about taking the pressure off you. Now here is the catch. So this is not for, if you don't have the money to fund your account to trade, then this is not for you. If you're looking for get rich quick, like 0 point this thing, like register today, make $2 million tomorrow, this is not for you. And if you are not willing to put in the work, then this is not for you. Because basically, if not because I'm explaining everything to you here, if you're done analyze it by yourself, it take you at most 10 to 20 minutes to analyze this. Then all you have to do is just figure out like maybe each hour of the day throughout the New York session and be checking what's happening in the markets, how the market is working, and you know how to adjust your trades to tailor that. Okay. If there's nothing that happened that's going to make you move your stop loss to profits, then there's no need for you to move your stop loss to profits. You leave it like that. So basically, if you have 2 hours, 2 to 3 hours free each weekday, Monday to Friday, to trade, then you don't need to say it doesn't have to be Monday to Friday, it can be Wednesday to Thursday. Those are also very good days to trade because there's less fear and panic in the markets and people are not reacting like mad people in the markets within those days. So if this is all, if I've mentioned out the benefits of the profit and trader bootcamp, so this sounds like something you want, then I will leave the link below. It's labeled PAB 2021 and you join. If you have any questions about it, you can ask me. I hope you found value in this video and like and share for others to see this. I'll see you on my next free video. Peace out.